Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots, you know, the actions you can take, how your family, your business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender on Ron Siegel Radio. Todd Halterman is with us today. Good morning, Mr. Halterman.
Good morning.
Glad to have you with us.
It's been a long time.
It has been. Too long. Glad to have you with us. Let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you. Reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. You know all the rest of the stuff. Hey, just remember, we're broadcasting here. Call me.
Quiet, numbskulls. I'm broadcasting.
Yeah, don't call me while we're broadcasting because I can't answer then. But call 800-306-1990, 800-306-1990. Hey, what are we going to celebrate today? We have to celebrate. We celebrate every day on Ron Siegel Radio. Certainly not the bond market from yesterday. We're not celebrating that. You know, in fact, I think we have the days mixed up here. Based on what happened in the bond market yesterday, we should have had Craft Distillery Day yesterday because the bonds fell off the table. We're going to talk about that. Craft Distillery Day. I don't know if Tito's qualifies as craft, but it does qualify for filling up my martini glass. And being that today is almost Friday, 3 blue cheese stuffed olives in that martini, please. National Solitaire Day. Okay, I guess all we could say on that one,
it is what it is.
Vanilla Pudding Day. I don't know. I'm into. Oh, Josh, you're doing 2 days in a row here. Vanilla pudding there going with that almost looks like flan. The vanilla pudding going with the strawberries that we had, I think, yesterday or the day before. It doesn't go with my diet, but I was sharing with the guys right before we went live. First time for me, under 300 pounds in about 10 years. The shots work. rsrlinks.com/shot. I've been taking them now seriously for about 4 months and just about at 60 pounds lost. Almost, not quite there. Just about 60 pounds. So I'm glad for that. Let's see what the markets are doing today. The Dow Jones Industrial Average is up 57 points. The S&P 500 is up almost 7. NASDAQ is up 109. Oil down 89 cents a barrel. That's we like to see the oil keep going down. Doesn't help us in California because we like high price. We like taxes. We like fees. Even the amazing Todd Halterman can't save us from California taxes and fees because look at our gas, $4.87 a gallon. I went to Costco last night to fill up, and I paid $4.65 a gallon. Now, Josh over there at $3.50 a gallon. Hey, Todd, are you under $3 up there in Idaho?
No, we're just shy of breaking into $2. We're like $3.20.
$3.20, okay. So the state average is $3.32 up there. So you're still $1.50 better than we are in California. I guess you're not going to go fill up in Washington, though, for sure.
Washington just increased their gas tax another, 6 cents, another like 61 or 62 cents a gallon.
So they're getting close. They're still amateurs. We're double that. It's amazing how some of these places just love to tax. I'm looking at the statewide average for Washington, 438. So I'm sure nobody in Spokane gets gas in Washington. They just probably go over and visit you guys in
The
Idaho.
state of Washington tried to tell the state of Idaho to start collecting some tax on Washington residents when they pump the fuel.
Well, you know something, at least one thing's good up there then. In California, we don't care where somebody's from. We take illegals and we take anybody. If they want to come in here and pay more taxes and fees,
Right.
you know, in our state's almost as bad as the federal government when it comes to being broke, right? I mean, I think we're over $100 billion in deficit when you look at the unrealized liabilities that we have.
Right.
It's crazy, but you know, we keep voting for the same people. So that's how I know that we like these things in California, because if we didn't like them, maybe at some point in time, we'd stop listening to Gavin Newsom and we'd stop saying, you know, something, 487 with, I think $1.28 now in taxes and fees. Now they are good at one thing in Sacramento. So we voted out the ability of giving the legislature the option of taxing us. So they just call it a fee now. So it's not a tax, it's a fee. And you look, a year ago, we were at 517. So we are a little bit better, but you know, it's just amazing how the whole country is getting better in their gas prices and we're getting killed. If you did notice, if you were up very, very early in the morning, I should have predicted this yesterday, because it's easy to predict that in the way our government works, they don't do anything until they absolutely have to, or it's in their best interest. It has nothing to do with what's in our best interest. It's in what's their best interest. So the Congress, the House of Representatives, what did they want to do more than anything else today? Go home. Right? They didn't want to be in Washington, D.C. They wanted to go home for the long weekend. So in the wee hours of the morning, they passed the budget reconciliation bill. You could have guessed that would happen. Now, when is the Senate going to do it? I'm going to guess, and I'll just throw it out there. Josh, we gotta save this recording for my prediction. My guess is the Senate will pass their version on the 2nd of July, maybe the 1st of July. Why do I forecast that? Because they want to go home for the July 4th holiday, right? So they'll get the bill done. They'll probably get it done on the 1st of July. Then they'll say, okay, House, you got to do it. They'll get their version done on the 2nd or 3rd. They'll all gone for the week. Well, what is this doing to the markets? Well, if you watched the markets yesterday and you had your Maylocks there because they were bond market, I'm not talking stock market, the bond market, if you watched that yesterday, the bonds were down dramatically. So we look at the bonds yesterday. They opened the day, if I can find it on my screen, at 98.46. They closed the day at 98.05. That's almost a 60-point move in the bonds. That's a massive move in the mortgage-backed securities. If we look at the 10-year Treasury, the 10-year Treasury opened the day at 454, closed at 460. Okay, again, big moves in these markets. That's the yield on one of them. The 10-year Treasury, talking yield, the bond price on the mortgage-backed bond. Why? Well, they want you to tell us because there was a bad 20-year auction yesterday. Hogwash, you listen to Ron Siegel Radio. We know better than that.
You know better than that.
There's two different versions of what they're doing in that bond auction, and it was very small yesterday. It was 20-year bonds. That's mostly going to institutions. The average investor's not buying into that. There's refunding and new funding that goes into that. And when they conflate the two of them, they say, oh, it was a bad auction. Nobody wants our bonds. Not true. But the big problem is that reconciliation bill, according to the market, and the market having its temper tantrum. And the market did throw a temper tantrum yesterday. They're saying there's not enough deficit cuts in there. Well, they didn't account for any growth at all. In the first Trump administration, the tax bill brought 3% growth. Add that to the tax revenue that comes from 3% growth, and you get rid of the deficit. not the debt, but the deficit. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, I did say it. I'm going to tell it to you again, and I did borrow it from a friend of mine. We have one tax code, two tax systems, one for the informed and one for the uninformed. Todd Halterman is here to help inform us. We're going to learn how to legally not pay as much in taxes. More homes for sale isn't a warning sign. It's your buying opportunity. Where should your credit cards really be? All that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564. Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less? All without having to spend more each month than you spend right now. Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at RonIsMyLender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037. RonIsMyLender.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates, with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They tell us the number you need to put into your mortgage calculator to find out exactly what your principal and interest payment will be. If you don't have a mortgage calculator, shame on you. We give it away for free every day. All you need to do is go to rsrlinks.com/mobile app. rsrlinks.com/mobile app. You put the number in, it tells you what your principal and interest payment will be. You keep that on your phone so that way it helps you all the time. Mortgage rates yesterday, they were a mixed bag. Conventional 30-year fixed up 6.925. Jumbo 30-year fixed down 7.035. FHA, the 30-year fixed, that was up 6.641. VA 30-year fixed, that was up 6.565. USDA 30-year fixed, 6.457. That's the rural areas, generally no down payment. And I will tell you, the best loan on the market has the highest interest rate. That would be the Home Select loan. We just helped somebody else get another Home Select. And the beauty of it was they're cut $58,000 off on their interest expense on a low income, not a low income, but a low priced home. It was like a $300,000 mortgage, not a real high mortgage, but they're cutting $58,000 from the interest expense, taking their 25.5-year loan down to 8 years and living their normal lifestyle. So make sure that you're looking at that one when you're looking at all the other loan products. What's driving the markets right now? Let's take a look and see where the markets are. So as always, we look at what's the S&P 500 is doing. It's up 22 points right now. Now, I'm going to tell you right now, we're going to get a lot of volatility in the next day and a half. Today being a whole day, tomorrow is a partial day. The markets close early. When the markets close early, you get a lot of volatility in the markets. So we've got the S&P is up right now 20.6. We've got the 10-year treasuries down 4 basis points. We like to see that going down. We've got the mortgage bond is up 7 basis points. What's driving the market? It's one big, beautiful driver. That's what's really moving the markets right now. Markets hate uncertainty. And when they don't know if the Congress is going to be able to do their job, and they don't know if the markets are going to act, and they don't know if we're going to have an increase in taxes by doing nothing because of the sunsetting, or if we're going to have the taxes stay the same and maybe some benefits from the budget reconciliation bill. Markets don't like that. So got a combination. So again, as I told you, yesterday's 20-year auction, very weak, caused by bond market to sell off. Additionally, global yields have been on the rise, pressuring U.S. yields higher. Moody's recently cut our credit rating. That was not good. House passed President Trump's big, beautiful bill, which is the new tax and spending bill, causing fear in the bond market because it could very likely add to our debt levels and result in more treasuries that need to be issued, which will have to be absorbed by the bond market. This is extra concerning for the bond market because we already are at a very high debt level. In August of this year, it's projected that we'll reach X date, or the date the Treasury Department is no longer able to fund the government. Blah, 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 blah. We hear that all the time. And at the last minute, they always find a way. Previously seen this play out in June 23, when Treasury Secretary Janet Yellen had to nearly deplete the Treasury general account to keep our debts paid, but she did it. Existing home sales fell 0.5% in April at a 4 million unit annualized pace, which was worse than the slight gain expected. Year over year, sales are down 2%. Sales are well below where they would normally be at this time of year, which means there's a lot of pent-up demand that continues to grow. A drop in rates would likely result in a big surge in purchases. Median home prices rose 1.8% from last year. Don't worry about median prices because it is influenced by what the mix is of home prices selling. Cotality single-family rent index, that's formerly CoreLogic. Rent prices rose 2.9% year over year, which was unchanged from the February report. 2.9% reported by Cotality is much lower than the 4% in the CPI and PCE reports. If they ever get these numbers caught up, we're going to see that our inflation is pretty much nil. You look at the misrepresentation in the housing area. And then even to think about it, not everybody's buying a house right now. Not everybody's getting a new loan, a new mortgage right now. So you get a small percentage. I think we looked it up, 9.8% of the people are moving, yet it's 43% of CPI is housing. Egg prices are down, and gasoline prices are down. But the Federal Reserve,
such an idiot. Such an idiot.
Yeah, they just keep sitting on their hands doing absolutely nothing while we see that 82% of the states in the United States are reporting higher unemployment, 82%. Unbelievable. That's the Mortgage Minute brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Bringing in our favorite veteran, Todd Halterman is with us as we move toward Memorial Day. And I'm gonna get, I had a graphic that I was looking for and I haven't been able to find it again. I saved these graphics. And I want you to remember, please, please, please remember this, because so many people get it wrong. There is nothing happy about Memorial Day. It is it's a day of remembrance of those who didn't come back. So the commentary, if you're making a comment to somebody, it's a peaceful Memorial Day. It's a restful day. It's a day of remembrance. It is not a day to, we're not celebrating. It's not just for the picnic. That's not what it's all about. So Todd, thank you. We can't do what we do. I couldn't do what I do in having a conservative radio show if it wasn't for the men and women of the United States military. So thank you, sir.
Amen, brother. Do it again.
And you know something? It's amazing how many of the men and women of the military say the exact same thing, right? They do it, and they would do it all over again. So we thank you. And now, Todd, you know something? Go back to your because you've been on the program with us quite a few times, but we never in our private discussions, in our private seminars that you and I have done, you've shared a bit about your story of serving in the military, coming back, and how did you end up getting into the financial services world from being in the military?
About 30 years ago, my grandfathers had passed away within a short period of time of each other, and I was a fireman and EMT in Spokane, Washington. And because I only worked about half the month, my family kindly volunteered me to go to Lewiston, Idaho, every other week to help sort through the minutia of details these ladies were overwhelmed with. So I got tired of driving home 2 hours after helping them, frustrated and more confused than when I started 2 days prior. So I found somebody to help me, and they told me I'd be good at this and helping people. And I told them in no certain terms that I was ever going to be that guy. And he laughed at me and said, "You don't understand what I do then." And I says, "Well, why do you think I'd be good at it?" And he goes, "You don't understand." He goes, "You like to run into situations everybody else runs away from." And he goes, "It takes that kind of a person to do this right." So I would say 30 years later, he was right.
Yeah, it's and you know something, I know you well enough to know that you've got that heart of going and helping people all the time. So it's we appreciate you. I didn't find what I was looking for, but so we've got Armed Forces Day, celebrates the men and women that are serving, that are in uniform. Memorial Day celebrates or honors the men and women who never got to take off their uniform. They died serving. And then we have Veterans Day that celebrates the U.S. Military veterans. So the 3 different days, and every one of them very, very well deserved. So we're all very, very thankful that you're the veteran part, not the other parts, because you're out there helping a lot of people. And I know that how much time you spend giving back to the military and all the different causes that you're working toward and helping. So there's a lot of people that are out there that should be saying thank you to you for all the things you're doing every day. So I'll see it on radio, man.
I think great Americans do something every day to give back, and it's that purpose that gives us life, man. It's not the going to work and coming home. So I'm not alone. We've got big villages of awesome Americans out there that do the same thing every day.
Absolutely. And you know something, it's amazing. I had a conversation with somebody yesterday, and we were talking about home loans. And we were talking about the concept, you know, the VA loan, even in the great financial crisis, had the lowest default rate of any loan in the market. So you have people that are saying, you know, there's no down payment on a VA loan, and I'm ready to shoot somebody, not literally, when they say that there's no skin in the game. And I say they got more skin in the game than we'll ever be able to put in the game, because they earned that right to have that benefit. So the idea that there's no down payment is great, and it doesn't surprise me in the least that there's the lowest default rate of any loan out there. We're going to talk to Todd about what he's doing for people today when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. You can reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you believe Southern California real estate is a great investment? Are you a little short to be a cash investor? Are you missing the Social Security card or tax returns? The Siegel Lending Team has the loans for you. Common Sense Lending is back. Yes, there's a cost to higher risk, but the reward can be great. Call today for details. 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 217037 and DRE number 1869452. Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037 and DRE number 018694452.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com. Do you own a luxury home or planning to purchase one? If so, your home may be your largest asset, but your mortgage may also be your largest debt. The Siegel Lending Team is offering amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates in the 3%, and 15-year rates in the 2s. Learn more at ronsiegelradio.com or call me directly. My number is 800-306-1990, licensed under NMLS 217037. Equal housing lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com. rsrmoney.com. More homes for sale isn't a warning sign. It's your buying opportunity. Maybe you've heard the number of homes for sale has reached a recent high, and it might makes your question if this is the start of another housing market crash. But the reality is, the data proves that's just not the case in most areas. More inventory isn't bad news. It's actually a sign of the market returning to a more stable, healthy place. What's going on with inventory? Based on the latest data from Realtor.com, inventory just hit its highest point since 2020, shown with if you're watching us on RonSiegelRadio.tv on the graph, with the white line. But what you need to realize is at the same time, inventory levels still haven't returned to pre-pandemic norms. That's the gray line. Interesting. That means there are more homes for sale now than there have been in quite some time. While it's true inventory is up significantly compared to where it was over the last few years, the number of homes on the market is still well below typical levels. Do you want to know where the inventory should be in your neighborhood? Of course you do. All you have to do is go and get the free report. We put it out, rsrlinks.com/market report. rsrlinks.com/market report. I was chatting with somebody just the other day and I said the inventory in my zip code is up about 50%. Now it's at 30. So it's still not much, but it is moving up. Interesting. So why this isn't the problem a lot of people think it is. Some people hear inventory is rising and immediately think about 2008, because back then inventory spiked just before the market crashed. But today's situation very, very different. Here's the key reason why. We don't have a surplus of homes. We have a deficit to climb out of. What we're dealing with is a long-term housing shortage, and it's a big one. Next chart. Red bars in the graph below show all the years where housing starts, new builds, did not keep up with household formation going all the way back to 2012. The deeper the bars in the graph, the more the housing deficit grew. Deficit, remember that, we don't have enough. And one of the reasons this housing shortage kept growing is because new homes construction just didn't keep up with the number of people who need to buy homes. In fact, the U.S. is actually short millions of homes at this point, and it will take years to overcome that gap. Realtor.com says, quote, at a 2024 rate of construction relative to household formations and pent-up demand, it would take 7.5 years to close the housing gap, unquote. That means in most areas, there isn't a risk of having too many houses on the market right now. It's quite the opposite. A vast majority of markets actually need more homes, which is why, even though inventory is rising, it's not a problem on a national scale. It's just helping to fill a gap that's been growing for years. Don't let the headlines scare you. Rising inventory is not a sign of a crash. It's a step toward a more stable and normal housing market. What's slowing you down from buying? Probably the payment. That's because you haven't been listening to Ron Siegel Radio, rsrlinks.com/buydown. rsrlinks.com/buydown. Pay the higher price. Ask for a concession to buy down the rate. You'll save money over time. There is a way, even with interest rates. Right now, Mortgage News Daily said as of yesterday, 7.08 was the interest rate. We just shared with you the report from OBMMI saying 6.925 was the rate yesterday. But if you know strategy, you can be in the high fives. You got to understand strategy. Strategy beats rate always. That's the Real-Time Real Estate segment brought to you by rsrmoney.com. Continue our conversation. Our favorite veteran, Todd Halterman, is with us today. So one of the things that, our Congress and people like Todd fought so that we get to vote for the people in Congress. And, they put out these bills that we have, and we've got this tax code that is tens of thousands of pages, I think. It might even take ChatGPT a long time to understand it. But I just shared with you one tax code, two tax systems, one for the informed, one for the uninformed. And Todd Halterman is one of the informed people. And thankfully, he shares that information with us today. But Todd, talk to us a little bit. And again, Todd is one of the people that comes on the show that's licensed. not giving you financial advice individually. You want the financial advice personally for your situation? Give him a call, set up an appointment, retain him for his services. That's what he does for a living. We're just educating here. Todd, you were talking about an indexing fund, and I don't get all that stuff. But
well, we have a lot.
How does it help us save money?
We've had a lot of people come out of the woodwork who have hundreds of thousands of dollars in companies like NVIDIA, Palantir, Apple, Microsoft, Google, you name your favorite tech stock, and I'll show you a way that the IRS is waiting with knife and fork to get their cut. And unfortunately, a lot of good Californians, Idahoans, New Mexicans, it doesn't matter, around the country, are giving away 25 to 30% of their profits when they sell these stocks they've had forever, who have gone up like crazy, and they're wanting to cash them in to rebalance into other things, but they're being penalized by 25, 30%. And for some of them, it's stopping them from rebalancing. So when people come at us with that challenge, we talk to them about different doors they can open to help them reduce or eliminate the taxes they're paying. Direct indexing allows an investor to invest in 300 of the top companies in the in the S&P 500. By being able to directly index their portfolio with 300 holdings that's in the S&P 500, we're able to own those stocks individually instead of the index fund itself. And through the advent and abilities of AI and our trading departments, we are able to capture losses throughout the portfolio over a year's time to help an investor actually show losses while they're making returns. I'll give you an example. We built a portfolio for a client a little over a year and a half ago, and they earned 29% in returns against the index, a positive return of 29%, but we were able to record over a 10% in losses. So the client was able to get almost $20,000 in ordinary losses in their portfolio for a year, but their account actually went up over 29%. So direct indexing truly allows us to execute trades with individual companies in the S&P to be able to find losses throughout the year to help bring tax deductions, to help not pay as much tax when somebody's selling a highly appreciated stock like a Microsoft or an NVIDIA.
So, Todd, is there even a reason anymore to for the small investor to go out and buy, Microsoft or NVIDIA or Palantir? Is there a reason that one should buy something like that? When you've got when you're looking at you hope it goes up, which means you hope you get to pay a lot of taxes, versus going with some of these index strategies.
Well, the index strategies are good. The challenge is some people want to have collateral for their investment. They want to own a piece of a company. They want to have voting interest, so they have a say with the company's growth and doctrine. But some people favor ETFs that have a mix of companies like NVIDIA, and some people favor wanting to own individual companies. Now, there are biases to each. People love owning individual companies because they're looking for that home run, and they like the stability of owning a piece of that company. Others want a piece of the industry and don't want to worry about picking the right company, so they'll own 25 to 40 companies that fit in that space. And then they take the rise of the industry versus the rise of the individual company. And that just removes the risk of trying to pick the right company. They're both strong strategies. And the only time somebody picks one over the other is when they pick an NVIDIA, which happened to be the exact right one in the semiconductor space for you to own for a long time. Frankly, a lot of people haven't paid attention, but the cybersecurity company, Palantir, has outpaced them and outperformed them. So do you want to be in cybersecurity, or do you want to be in semiconductors, or do you want to be in aerospace and defense? It just really depends on how you're approaching your investment methodology and what your financial plan is.
Yeah, and you one of the things you said in there that I understand it. People say, "Well, I want to own a piece of the company or have a voting right," but for the vast majority of us, we're just insignificant players. We don't even get to the point of being a pawn in the game. We're the cardboard box that the game came in. We're so insignificant, right? I mean, you own even if you own 1,000 shares of NVIDIA, right? I mean, it's not enough to sway anything of anybody. So.
Yeah, no, but people like to own individual companies, and in the index funds today, you must be careful. Indexes carry a lot of weight based on how they're made up. So indexes carry more risk than they carry an average return. So what we have to watch for is how much risk is a person taking. But you're not wrong, Ron. Diversifying with ETFs and indexes makes a lot of sense to me. But I like a mix. I like a core for clients to own individual Coca-Cola, IBM, Johnson & Johnson as some core holdings that are profitable companies that have grown their profits over 3 decades or longer. Then we fill in with diversification using industry and sector ETFs. And industry and sector ETFs are like, how big do you think the cybersecurity business is going to be in the next 10 years? Well, then let's buy some exchange traded funds that dominate in the cybersecurity space. So we like specialist themes. We like individual holdings. But if a client's going to own an index fund, we would rather own an index fund using a program called buffers and dual direction.
Yeah, it makes a whole lot of sense. I used to follow one of the hedge fund guys on TV, and his whole thing was, I don't know which one of the cybersecurity companies are going to be the one that emerges. So if I buy a little bit of all 5 or 6 or whatever there is, one might fail, and one might be a home run, and 2 or 3 might just break even. But at least I've got a basket, so the basket helps.
Yeah. Yep. And so the direct indexing is just a program we use to help people reduce their taxes, execute for growth, but have protection on the downside because we sell the losers and record the losses for tax returns. But we've just did another one for somebody who had a $400,000 gain on an individual stock. So over the next 2 years, we're going to rebalance and diversify that stock and reduce the taxes down as much as we can.
Interesting. When we come back, Todd, I want to talk to you about why wouldn't I, with a 29% return, which obviously we can't guarantee going forward, but with a 29% return, why wouldn't I just go all in on the indexing fund? We'll talk about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. More with Todd Halterman. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990. We will be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the first Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by GetHomeSelect.com, GetHomeSelect.com. Anytime you're thinking about any kind of an investment, doesn't matter what it is, there are three words that you need to consider: safety, liquidity, and return. When we're talking about borrowing, same thing: safety, liquidity, and return. The Home Select loan, it is safe, it is liquid, and boy, oh boy, when you understand it, it has great return. How'd you like to have a loan where the interest rate has been going down each month lately? The payments have been going down each month lately. And as you understand the loan, the payments go down over time. It works on homes from, I've done them now at 300,000, 250 actually, up to about $1.5 million. And you have more liquidity than any other home loan product. Unbelievable. If you want information on it, gethomeselect.com, gethomeselect.com. That is the Borrow Smart segment. And we are continuing our conversation with Todd Halterman now. We've been talking before the break about, a program that Todd put together for a client. And Todd, you were saying that it had a 29% return on investment, and you were able to record a 10% loss. And I love that idea. And obviously, again, I'm going to say it. I said it a couple segments ago. Todd's giving us education, not advice. If you want advice, you got to go through all of the right things with the, understanding your client and all the rules and regulations that govern Todd. But Todd, why wouldn't I want to just put all my money? I mean, you got an S&P, you've got top 300 companies in the S&P 500. That's going to give us massive diversification. I don't know how it's weighted, but it's giving us massive diversification. It's giving us an unbelievable rate of return. It's one of those things that I can set it and forget it. I don't know what the S&P did over the same time period, but this has to be at least 30% better than the S&P returned over that time period. Why wouldn't I just want to put all my money in that one thing?
Well, we do have clients that put all their money in the direct indexing because they want pure growth, but the portfolio is generally an all growth allocation, which not everybody's risk tolerance is good with that. But that means you want 300 stocks that are in the S&P 500. And we, with the trading department, go through and analyze which stocks out of the 500 we want to hold. And we hold about 300 of them. In the case of the example I gave you, yes, it outperformed the index because you have to understand the index works in rules of thirds. A third of it's going to drive the growth of the index. A third of it's going to be kind of neutral to whatever the momentum of the market is doing. And a third actually is showing losses or what I'll call revenue neutral returns. We all go back and know that the Magnificent Seven carried a majority of the returns in the indexes in 2023 and into 2024. So somebody built an ETF named MAGS, M-A-G-S. So an investor could buy all seven of the Magnificent Seven stocks in one ETF. But that's since changed. In the first quarter of this year, we watched the market rotate out, and there were a lot of people that had some significant losses in some of the stocks of Magnificent Seven. And Microsoft and Google are still down significantly. NVIDIA is starting to pick back up. Google seems to be struggling. Amazon's picking back up. So there's some momentum with Meta and Facebook. So The reality is it's risk, Ron. Why wouldn't you do all your money in the direct indexing? Because it can be way too much risk. But we use it as a tool for growth and for intellectual investors, a way for us to reduce their tax liabilities on highly appreciated stock. But there are 3 different ways to help an investor not pay taxes on their stock or highly appreciated assets when they sell it. The direct indexing is just a fun one because we truly get to see clients grow their money, but we get to record losses.
Nice. Now, do any of the programs that you have help where somebody has a high income? They don't have necessarily the capital gain, they're not selling a business, they're not selling a stock, but they've got, significant income, doctors, lawyers, whatever. They got significant income. Are there programs out there to help those folks too?
You bet. There's programs out there to help reduce income on your tax returns. One of my favorites happens to be in the oil and gas industry. And there are American tax breaks for folks who want to own American oil and gas. So imagine being able to invest $100,000 into oil and gas, and $90,000 of your $100,000 investment is able to come off your tax return as ordinary income in year 1. So if somebody in 2020's tax year wanted to pay lower taxes and they bought an oil and gas program for the deduction, they would have already made 110% return in distributions from that investment and gotten the tax break. So we like the oil and gas business. Obviously, the Trump cabinet wants oil and gas production. The globe needs oil and gas production. You can't build manufacturing and drive growth in clean energy without oil and gas. So this is a really great time for Americans with high income to make sure they have energy and oil and gas in their asset allocation mix. But if we can also compound that with dollar for dollar tax deductions with investing in markets that America favors for you right now, then that's how we like to invest.
Now, let me ask you, because as we came into the segment, I mentioned that, we always want to measure whatever we're doing based on safety, liquidity, and return. Are the oil and gas investments, are those liquid?
They are not liquid, which is why you get the tax deduction. So when something is not liquid or considered redeemable immediately, then it's immediately called high risk. And people need to understand that investing in oil markets is not low risk. And to get the tax deduction, the government says you must be an arm's length away from the holding, which means you invest the money, and the oil and gas producers utilize those funds to build out the oil and gas structure. And you are given that right off in year 1 because you do not get that money back. That money goes into the production cycle, and you get your distributions and dividends back. And most of our clients have their money back in their pocket in 5, sometimes up to 7 years. And then they own the rights to that oil and gas program for the rest of their life or that program's life.
You're wanting to do that. You're wanting to do that with money that you don't have an immediate need for it.
Yeah, this is not something that you want to put money in and like an ETF and get it back out in 3 years. This is specifically for the advantage of the tax deduction and to add oil and gas as an asset in your portfolio mix, so you can be an owner of that program and not just an investor. That's how that works. There are oil and gas programs that are liquid and redeemable, and the funds do come back to the investor when it's full cycle. And those give different types of tax deductions. So if you have a rental or rental income, we can use that energy program to help take the rental income off your tax return. And that's only a 3 to 5 year program hold, not a lifetime hold.
Beautiful information, Todd. I appreciate it. We learn so much from you every time you come on the broadcast. And as we said, and when we at the top, 1 tax code, 2 systems, 1 for the informed, 1 for the uninformed. If you're uninformed, you better give me a call at 800-306-1990. Because not that I'm informed, but I know I'm informed enough to know Todd Halterman's phone number. So we'll put you in touch with Todd and his team. And maybe you can minimize some taxes out there. Obviously, it's all done with the legal way, and Todd's got the legal team and legal background, so not doing any of the shady stuff. But I will put you in touch with Todd. Todd, we appreciate you. Appreciate your military service and coming on all the time, giving up your time to help our listeners save some money. So we appreciate you, buddy.
You're great.
And as always, I ask, hit that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.